Alright, good morning in YouTube land and Discord land. Can you hear me? If you can hear me, please place it in the chat. Thank you, Joe. Appreciate it. Alright, I'm assuming Discord is good to go. I'm going to do this disclaimer and I'll be back in 90 seconds.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will prompt trade losses any limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in most Apple Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made with any account below is likely to achieve prompts or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit in hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading requires completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general and to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This trade room and this webinars are not intended to mirror my trades or to give specific trade recommendations. In analysis and setups, I share trades and potential trades that I take for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas of trades and hedge themselves, but ultimately the decision is yours. Trading is extremely risky, and if you decide to follow my personal trades, you do so at your own risk and potentially lose your entire account and even more. I'm not always profitable and I have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values and I'll need to weigh exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices that I trade, whether you want to go long or short. You have the ability to copy the spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction the trade is in, as entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alright, good morning. Shocker, shocker, equities are rallying here. Just got new lugs in the MQ. Let me share this document in YouTube. This is all the information for me and discounts and stuff you can get through my links. I'll put this in the Discord as well. Hold on here. So there was just an event actually here in NASDAQ, so we'll draw this and see what happens here. I was actually surprised after this CPI number. There were no events. Like usually right at the open, there's stuff whipping around in events, but there was some market pulse examples, the newest indicator with Bookmap through Bookmap, and I'll show you those. There's actually a very nice trade. So you can see here, 189 stop run. You can see it a lot better with these sweeps. So what I tell my trade room every day is, sweeps get first right to the order book, and then the stops are allowed to fire off, right? So you don't know if these stops were sitting at this price versus that price when you go to draw your zone, right? Because they could have been anywhere. This one's a little more compact, but a lot of times you'll see sweeps like that, and then the stop run fires off at the back end of the sweeps. Well, you don't know where the stops were, so you got to draw the zone where the sweep started. So this is why you want Global Plus as well. So I know it. I know the stop runs were not actually. This one is accurate. This is where it started. How do I know that? Well, the sweeps did start here, but this price already traded, and that would have triggered the stops most likely, unless someone just threw them in right away, which is doubtful. So you know that's not the price because they would have already triggered because this price had traded. So this actually is accurate. But you're going to see sweeps. I'm sure we'll have some examples here where you want to draw them where the sweeps start a lot of the times. This one is This one's actually accurate, so let's draw that. Things are actually pretty dead right now. I'm not sure what's going on. Feels like breath holding after the number. Somebody loaded up, it looks like. Let's draw the zone, put it in our spreadsheet. So this is how I trade. I draw zones around the volume events, which are the most important thing in trading, in my opinion, from watching markets for 23 plus years. When you can have these volume events in important areas, then you have the ultimate edge, right? If you already have things you look at that are, that you trade off of, whether it be zones or VWAP, Bollinger Bands, all the stuff that you guys love to put on your charts, if you think they're useful, well, they're useful if volume actually occurs, and if you know how to trade these areas, if volume occurs at those areas. So that is the edge. So this zone is 1540.36, 436 to 15.432. So this is the spreadsheet that you get if you're part of my trade room. I'm actually
RTY stock by RT 169 contracts.
I should have this live for subscription base. I'll send out a mass email. Just go to my website and put your name in for the email chain list, and I will send it out when it's ready. But people that can't join my trade room for whatever reason, they have other job and whatever, you can have access to this. It'll be subscription, but this is an incredible time saver, and it tells you everything you need to know as far as based on my rules of watching thousands and thousands of these, where you should get in, where you should get out. So what we do is we plug in the zone price. So this was 15.436 to 15.432. Just make sure that's right. Once I start chirping, I forget my areas. Then the other very, very important thing is your ATR. I'm using a 5-minute Wilders ATR. You can see there it's just a 14 period Wilders. It's the default on Thinkorswim. You can load this up on basically any trading software. 14 period Wilders ATR. Google it if you want to learn what it is. This is just telling me the current volatility. So it's telling me this market's rotating about close to 30 points every 5 minutes, that is really important. The two most important things in trading is our volatility and volume events. So we plug that in. So then once I plug that in, and then I have my risk that I want to, my account size risk, and I'm doing these Apex accounts. We'll go over that throughout this webinar, but I'm risking 10% of these accounts, which if you're trading real money, you do not want to be trading 10% of your accounts. Once these accounts go live, then I'm going to go back to the regular. You should be at 2% of an account size max for individual trades. So if you have a $5,000 account, that's real money. You should be risking about $100. I know that doesn't seem like a lot, but if you trade more than that, you're going to encounter a day where you are going to go on tilt, and you're going to blow out your account very likely, or crush a good percentage of it. And when that happens, then it's a whole different world when you start questioning things, and then you start to be afraid to put on trades, and it just turns into a snowball. So there's a few things that I always harp on. If you're going to learn from these webinars, this is one of them. Control your risk, because it will bite you in the ass eventually if you don't. People will still not listen to me, and you're going to learn the hard way. And this is why I do these webinars, because do you want to learn from my trials and tribulations over the last 20 plus years, or do you feel like having those happen to you for 20 years until you finally learn your lesson? How about you fast track it, listen to me, so you don't have to go through the pain and just the good stuff. So that's my recommendation, but you can do what you want with this. But I'm telling you, you're going to have a day where shit hits the fan and you're going to get killed. Anyway, so once I plug these in, this tells me so according to my rules, I judge my volume events if they can get an ATR away from the zone, right? There's just something inherent about if the market's able to push an ATR away from the volume event, that tells me which way I want to be trading potentially, right? So these are the prices for this zone in NASDAQ. If this gets up to 65.25, then it's a long setup. If it gets down to 402.75, it's a short setup. And you can see our validation price for my potential trade. So let's see where we're at here. Shrink this down. Fast forward up to where we're at now. All right, so this is right about to prove as a bearish event, right? Let's make sure I got this right. What is this here? Yeah, these are small. So, and surprise, surprise, this is the other trade that you'll have access to for the reversion strategy. I'm actually going to have a course on this that explains this, but you'll have access to the spreadsheet through that course, or you can get this spreadsheet again. It's going to be much cheaper just to, if you just want to wing it and try to figure out what I'm doing on your own. But this is where you're playing for these algos that snap the market back to the volume events at the ATR. So we get in actually right before an ATR for this strategy. So you can do the 1, the 2, or the 3. Usually equities are the sweet spot are 1s and 2s. NASDAQ is probably 1 works the most. So you get, here's your entry, 575, your stop goes at 70.50, and you're just playing for a move back to the zone. I'm aware that this is a less than 1-to-1 trade, but as you go out, the ATRs, they become better, and actually some of my room posted this information not too long ago. Jay Labrada has been a godsend to my room, so I'll build a spreadsheet and monitors it and everything. But anyway, if you look at this here, these are the percentages you need to be profitable on the trade. So the 1 ATR you need to be to break even. The trade has to be 60%. From my studies, from my experience, that trade is 70% or higher. That the 1 ATR comes back to the zone, right? So if you're 70%, you're making a lot of money over a series of trades. The 2 ATR is 42. All you got to be is 42%, so you can be basically a 40% trader with this and make money. So if you're making 50-60% on those trades, you're crushing it. And then the 3 ATR is all you got to be is 34%. So you should be saying to yourself, well, why wouldn't I just do the 3 ATR? Well, because a lot of times the market won't go 3 ATRs before it snaps back to the zone, right? So that's what you have to determine. I actually am working with a developer in my room. We just signed the deal. And this is all going to be, we're going to have this all back tested. We're going to know the sweet spots for every market, and it's going to be automated. So eventually you can get the automation, because it's hard. If you're watching multiple markets like me and I'm doing webinars, I can't do these trades on these webinars. I could barely do them on my own because I'm watching so many markets. So once this is automated, it'll be perfect too, because when you have an edge, you want to take the trade every single time. You do not pick and choose, or you ruin the inherent edge, right? So when this is automated, it's going to automatically just fire off. If this thing gets down to an ATR, it buys it, and it's out at the beginning of the zone. You can do it by hand. It's just you got to be on top of the market, right? Especially the ones. So anyway, this touched almost the exact price, the 575 for this reversion trade, and literally all it is a trade back to the volume event, and it is uncanny how many times that happens. You guys have been hearing me talk about it for 5 years on these webinars. And we were actually going over, we'll get into these rants later, but I was going over this trading in the zone. This stuff's directly from trading in the zone, and we were talking about, he's got an exercise here where you pick a market and you figure a set of variables, so on and so forth. So I said, you know what, all I do is talk about how these markets retest these zones. Why don't I have a trade that trades the retest of the zone, right? It's kind of counterintuitive to what I'm doing with my position trading, because the position trading, I don't want the stuff to retest. I want it to go, right? So it's kind of counterintuitive, but I'm like, let's do this test. It's literally get the book trading in the zone, and you can do the test yourself with whatever variables that you have. I said, let's do the test, and then all of a sudden the thing was just like, it was working nonstop, just like I thought it was, right? Because I know that was an edge. So that's how that trade was born. It's pretty incredible. But you guys will have access to that spreadsheet, like I said, here shortly. And I'm going to have this is my new course I'm about to put out there. My SI indicator course. I know it's been forever, but it's almost done. So anyway, this is, nothing's going on here. We're just waiting to see. This is obviously a bearish event. So the things I look for, I'm actually not going to take a short here. Actually, I could possibly take a short here on an Izzy trade, an inflection zone trade. Let's take a look and see where we're at. No, there's really no zone here. So these are my inflection zone trades, or my inflection zone charts, where important things that happen on the based on the 4 important areas of charting. Tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction, and buying and selling tails. I don't see any major tails here. Little guys right here, but here's a couple tails here. That the tails are very important too, because it's just a rejection. Anyway, I'm going to have subscription for this too coming up. It should be done here in the next, hopefully, day or two, where it's going to be pretty cheap too. It's going to be like $24 a month that you guys can get access to these. You can draw these yourself, right? But if you just want, I draw on 17 markets every morning for my trade room. You get them automatically in my trade room, but again, if you can't make it in there, then you'll get access to these. These zones are extremely powerful. So this is what I was.
Iceberg sells EL 159 contracts.
So this is what I was talking about at the beginning of the webinar, where you may have important things that you look at. I know there's already an inherent edge in these zones, right? Just based on stuff that's happened prior, and they keep holding. Like this is a gap up, this is directional conviction, this was. I know this zone's powerful. Then when you throw a volume event in that area, a real-time volume event, something that's happening right now, not from 4 weeks ago, then you know. And it turns out to be, a bearish event, then you know that zone is very, very likely to hold, and that is an incredible edge. So you'll have access to this stuff here too. I will send out a mass email. Just go to my website and put your name in, so you're on the email list when I send it out. Hey, look at that retested. So I can't actually put on a short here because I've added a filter to my shorts because I went back and was looking at my trades. And my BARF trades, we'll go over these different trading strategies. My BARF, you guys are probably like, what are you talking about if you're new in here? What is BARF? Are you throwing up on your desk? No, it's a blind, it's just an acronym for blind ATR retest failure. It's when you get any volume event and you wait for an ATR, which we've been talking about this entire webinar, retest failure. But I've noticed when I take these, because the BARF is a very active trade, it's, and it doesn't take anything else into consideration up until Algo Guy, where I would just take it no matter where we're at. I added this filter where I can only take the BARFs in the direction of Algo Guy. So Algo Guy, this is just an exponential moving average. I post it every week. If you guys need it again, put it in the YouTube. I post the link to the explanation of this. It's a video. It's very, very good. You can come up with like 10 strategies just from that video. But this is the shorter term exponential moving average ribbon. So these are just different periods, shorter term, and then here's the longer term. So when the blue is above the red, it is a bullish scenario, right? And many times this signifies trends, many times, right? So I'm not taking BARF trades like we saw this at NQ. It did get ATR retest.
176 contracts.
ATR retest, and even if I get an ATR retest failure, that inherently is bearish, but I'm not fading Algo Guy, so I'm only taking BARFs to the upside. As of right now, this could change. This could crosses all the time, right? But I wait for that because I've been getting smoked because you're fighting the algos. The algos are 80.
Iceberg by ES 709 contracts.
I finally got an ES set up. Algos are 85% plus of these markets, and they're not all exponential moving average algos, but you're fighting algos, and I don't want to fight algos. I want to be with algos, and that's why I'll take those trades. But this is technically a short setup. I'm just not taking it. And you did see this was the perfect. You think it's a coincidence this thing stopped right here in this volume event? No, that's what we trade off of. Anyway, this was the reversion trade to a T. You're out of the trade. You made a nice 19 points or whatever that was. So that setup is done for me. I would have taken it aggressively to the short side if that was an inflection zone in Izzy trade, but that did not happen. There was nothing there, so I'm not taking that trade off of that zone. Now we just got something new in ES. And I'm going to show you some market pulse examples here in a little bit. So you can see out of nowhere, 849 buy ice. Icebergs are just hidden orders in the order book that don't trigger until so you get the iceberg. What's showing in the order book is just about a small fraction. Usually it's about 10%. I forgot. I don't know what the CME rule is now that they have to display, but that's what shows in the order book. So if this was 800, say this is 900, it's close to 900 ice, right? Well, all they have to really display in the order book is a 90 lot. So people think, oh yeah, I'm going to smush right through that and push this thing down, bigger traders, and then they run into a mouthful of another 810 behind it. That's pretty significant information, wouldn't you say? So that's very important. The icebergs are not always right? But they are the big money, and you want to pay attention because they're right more often than they're wrong. But when they're wrong, you get the same type of effect. We're looking for these areas where we're going to get trapped traders. So if somebody's selling this aggressively in here, one entity is buying it. Who's going to be right? Who's going to be wrong? I don't really care. I will take advantage of that movement. So that's what we're doing. There is no better edge in trading than this information. There's just not. I don't care what you show me you can enhance it by knowing this information. And you can see it on the on chart here too. It's this yellow line. I have that's the stop iceberg on chart as well. So the way you draw these zones, you figure out where this started, and then you incorporate all the prices that happen in the spike. That's the way I draw these. I've been drawing them like this for 5 years plus. So that's our zone. I like to color them different colors so I know what they were. This was a buy ice event. I make fun of the drawing tool every single webinar for 5 years now. Hopefully one of these years they'll change it. It's literally like you're on a 1985 Atari machine. Let's see if that is right. Yeah, that looks right. So now we plug in the zone in the spreadsheet, right? And once you guys get access to the spreadsheet, you're going to see what a godsend it is. And again, like if you can't be in my room, you'll have access to that thing. 45.37, 45.35 quarter. Plug that in. Whoops. I wish we were at 42.37. I am inherently bearish. It doesn't work out very well for me. Thesis-wise, I still trade both ways, but I always want this thing to get killed because it's just nonsensical to me. But again, I am a day trader. My gift is not in calling bigger, longer-term moves. Yes, structure-wise, I'm pretty good at understanding structure and how the market reacts. But I have opinions all the time. Like I've been thinking this is going back to COVID lows since COVID. How's that worked out, right? So it doesn't really affect my trading. When my thesis, my current thesis is in line with these volume events, then I will trade them bigger, and maybe we'll get a couple of examples of that. But I don't let my long-term bias affect my trading, right? That's a lot of traders feel like they have to impose their will on the market, and there's that saying that the market can stay irrational longer than you can stay solvent. So stop trying to think something should happen and just trade what you're seeing happen, right? Happening, I should say. All right, so that's that. Do we plug in our ATR? Yeah, it's actually 5.97. That's pretty high. It doesn't feel like this thing's moving around, but this is moving. That means it's moving around 6 points every 5 minutes. So this is a perfect example for you guys that just continue to say, you have these static stops where you say, oh, I got long, I'm risking 2 points. Well, when you're risking 2 points from the ATR 6, you have a very, very high probability of getting stopped out, right? So that's why when I take trades, and we may take this one here, I put my stop in ATR outside of an ATR of the volume event, right? And you'll see that demonstrated here. But I'm telling you guys that are using static stops, you're just asking for trouble. When the ATR is 2 or 3, yeah, you can risk 2 points if you want. If it's still in a random area, you're probably gonna get stopped out most of the time. But you'll see here how important it is to get outside of an ATR, because that's just it proves that the event is right or wrong the majority of the time. All right, let's see where we're at here. Bigger picture. This is an Izzy trade, potential Izzy trade, and these are the best Izzy trades. We caught one the other day. I forgot what it was. I think it was natural gas. Straight directional move into an important zone, and you can see there's been multiple things here. This directional conviction, the first part of it started up here, kind of paused in the hour change, and then it led to a much bigger move here. This actually went back here at the time, but traded through it. There was tails and stuff like that there. But even with the more recent, you had the directional conviction out of here, gap down, that's directional conviction out of here. Here we are again. High percentage. If this volume event fails, this thing's going to fail here again. And I will take advantage of it. Well, how do I determine that? Well, as long as this doesn't get an ATR above this zone, I am going to short this market. If it gets to the validation price, which we've already covered, then the short idea is off the table for that event, right? So if this touches 43, I cannot short that inflection zone, that Izzy zone. What I could do, if it does get to 43, I have other trades, potential strategies on the table here. You can see Algo Guy is bullish. We talked about this. Blue is over the red. So I can take BARFs and lick trades. What are those? Well, you can see there's liquidity up here, so I can take those. And the BARF, again, is just the blind ATR retest failure. So you see all these listed here. These are the Apex trading accounts that I use for these. And they're gradually grinding up. The trade, what I talk about all the time in my room is trading as a grind, guys. Like, if you think you're going to come in here and just your P&L is going to look like that, you're in la la land. It's not going to happen, right? You may have a couple days that do that, and that's the whole idea. Great traders usually have a handful, 5 to 10 days in an entire trading year that make up almost their entire P&L, right? Most of the days are like that. You make a little, you lose a little, make a little, lose a little, and then you have a huge day. Then you make a little, lose a little. If you have your stop loss in place for the day where you don't lose more than 6% of your account, your drawdowns are not going to be that big. And then you hold on, and then when you have the big day, and that's how you make money trading, right? But if you think you're going to, you hear all the time, if I could just make $1,000 a day, then I'm good to go. Well, yeah, you can average $1,000 a day. You are not going to make $1,000 every day. It's not going to happen. Just not, unless you're like Goldman Sachs that makes money 190 out of 200 trading days because they run the show, right? They run the markets. But retail trader, it's not going to happen. You're not going to make money every single day, ever. It's just not going to happen. So if you can realize that, and you realize, if you can just keep a level head during slow trading times. Actually, let me get this Izzy trade into, and then I'll go continue on my rant, and I'll show you guys my P&Ls for some of these, just to show you it's a slow grind. First of all, I talked about the Izzy short. I can enter at 28.50. See how this tells me based on my account size? A spreadsheet tells me plug my zone in, ATR, my account size. It tells me exactly where to get in, and it tells me how many I can put on. So I can put on 7 MES based on that $500 risk. I'm risking 15 points in the ES. Why did I could just hear, people like, what, 15 points? That's ridiculous. Guys, do you think I like risking 15 points? No, but I've learned the hard way. I have to risk that because once I get in, if I get in at the 28.50 or whatever that price was, I don't just put my stop in random areas because of what I want to lose. 2, 3, 4 points. I'm only risking 2 points when I put this trade on. You are going to get algoed out 98% of the time. I put my stop, an ATR, outside of an ATR, a volume event. I have to risk more points, well, then you just cut your size down. I don't care. You can see here. If I have to risk, say the ATR spikes up to, so watch how this changes, right? So right now I'm risking 15 points with a 6 ATR. If something comes out and ATR goes to 15, now I'm risking 36 points. Then I risk 36 points. This is what I change. I change how much I can put on. I don't impose my will on the market on what I want to risk. I accept this and I change my size. That's what great traders do. Profitable traders do. If you keep trying to impose your risk with your static stops on the market, you're very, very unlikely to make it as a trader. So, all right, a lot of ranting already. Let me take a break here. If you guys got questions, throw them in the YouTube chat box. So I'm going to short 7. I'm going to round up at 28.50 if this comes back down, and this is the Izzy trade. So I will place that order in, and you guys will hear it fill if it comes down there. I'm not actually showing trades. It's just a compliance thing that Bookmap, but I don't do it in my room anymore either. I just tell you what I'm doing. You see everything I'm doing here. And the whole idea is not to be mirroring my trades. It's to learn how to do this for yourself. If you just mirror trades, you're not going to make it either, right? Because people change their minds, and it's just they're not consistent. Learn to do this yourself. All right, so this is trying to get up to this invalidation for the short, and then I'll just cancel that short, and then I'll be looking for longs. Validation price is 43, so if it gets up to 43, and it's trying, then I will be taking barfs and licks to the upside. The Izzy trade is disqualified, and that's also telling you something thesis-wise that this thing blows through this zone. If this just blows right through the zone after the size of this move that got it here, it's telling you something for the rest of the day, in my opinion, right? This should have some kind of reaction. If it just blows right through, well, now you're looking at resistance that turns into support, right? And then I'd be looking up for that zone. So we will see what happens there. Let's take a look at our market profile and lugs. So every morning, so that did not get up there. So my shortest didn't get to the 43 invalidation. My short is still alive. So every morning I try to come up with a thesis on what's going on. And, I'm a day trader. Even if I'm totally bearish this market, which like I said, I usually am, I will still trade to the long side. But if I really am bearish thesis-wise, then I trade bigger when my setups come to the short side. That's all. That's the only difference, right? All right, so you got new lugs here. I had to refresh that. So these lugs are Ludwig levels. The second most powerful thing I've ever seen in my trading career. These things are ridiculous, insanity, how they respect these areas. Again, it's in that spreadsheet. I mean, you can even see here overnight. Was this overnight? It bounced off the blue lug. So you literally could have been like, this is how stupid these zones are. I mean, I personally just trade them with volume events like I've been talking about, but this is one of the examples, right? This could be anything you're looking at. It's an edge. This is an incredible edge, but I still demand a volume event there. But you could have been like end of the day yesterday, you're like, we're at the blue lug. It keeps trying to get below. It's back above. I'm going to buy it, and I'm going to go to sleep. I'm going to put my order at the red lug. Look at that. I mean, I don't know if you like 50-point moves in the S&P while you sleep. That trades for you. These are ridiculous, and you can imagine when you have volume events at the lugs. So what does this mean when it blows through? Well, most of the time there's some high relative volume before to cause these zones or these lugs to form new lugs. You've got some pretty big money playing most of the time, right? Especially when these lugs are at extreme standard deviation of VWAP, which this was. There's some big money playing today, and you can even see it in this. Obviously, it was the CPI, so the big money's playing. So that's one of the reasons. But you can see this market has been very close to 200%, which is 2 times normal all morning. That's when it usually blows through the lugs, right? Other than that, they hold like they're incredible, like I said. So yeah, that beforehand, and then you still have heightened volatility or relative volume. So what does that mean? Well, you come up with a thesis when you form new lugs. Like I would have been, in a normal day, and I got a volume event, and I take it, and usually they work perfectly. Say you lose and it blows through. Well, that's telling you something. Now, the thesis I have for this market, we already talked about it's about to get through that zone. If it does, that's very bullish. I think we're going up to that next inflection zone. Then when you form new lugs, you want to see the market hold directional yellow, prior red, if the bullish thesis is in effect. This should not break prior red. See how it tried here and pop right back above? If it's going to head higher. It can. I mean, sometimes it does this, but the majority of the time, remember, trading is just probabilities, percentages. It's not everything. Nothing is 100%. But thesis-wise, I want to see this hold, and then I think we're heading up here. If this for something happens now, and these are markets, anything can happen, and it gets below here, then I would be saying that would be my next target down, right? So that's how you can use these lugs. As far as thesis, obviously support and resistance, obviously targets. Like I said, the nighttime trade where you go to Betty buy and wake up and you got 50 points. So you got targets, you got thesis, and then support and resistance. They're incredible. So I've been using these things for 2 years. I post the. Let me see if I can find it real quick. It's on my YouTube channel. I've been posting. Actually, you know what? It's in my trade room. Let's find it. I know I post this stuff all the time, guys. You got to remember these Bookmap webinars are for newer traders, so you're going to have to go through some of the stuff that that you hear all the time from me. But let's find the. I just forget what it's all at. The webinar. Let's go to Trade Room Basics. I'll post this in. Here you go. Watch this. That's a live trade example. How to draw zones. That's part of my trade room. Where is the Ludwig? Here it is. This is one I did with her 2 years ago. Just as a newbie, I want to know how the stuff works directly from her mouth, how she trades it, and it's a very basic, but it's a very, very educational video, and you can see how I use the load. I posted that in the YouTube as well. So have at it. You'll be a believer once you get these. You should hear the people in my room. They're just like, oh my God, these things are ridiculous. I can't believe these things. I just nonstop. So I use them for a reason, guys. I do not just add stuff into my trading. Granted, I didn't just add this. I've been using it for 2 years, but I had some guy telling me he made, with the volume setups and lugs, he was killing it. He went from a micro trader to all of a sudden he made like $1 million in 4 months. You guys remember that story? His name was
153 contracts.
Chris Short Squeeze. By the way, we have a new millionaire in my room too. He's turned his P&L from 150 grand. He's not actually a millionaire. I mean, it is $1 million, but he's made like 850 grand since February. It's pretty incredible. His name's Lance. You can come in there and learn what he's doing. He's just basically doing what I teach him to do. And he does it religiously. He doesn't start adding his own crap in. But anyway, he kept this Chris short squeeze Chris, that was his moniker, in the trade room. He kept telling me about these levels. We did mentoring sessions. We did multiple mentoring sessions because he wanted to learn how to make them better with these volume events. And he kept chirping about him. I'm like, fine, I'll take a look. And I started watching him. I didn't use him right away. I watched him for a few months because I'm not going to introduce something to myself, first of all, and then my trading community if I don't have 100% confidence in it. I'm like, these things are ridiculous. All right, I'm about to get filled here. 28.50 is... So remember, I took this short. Why? It did not violate to the upside. It didn't get up to that validation price for a short, so I'll still take this short. This is probably going to be I'm fighting algo guy, but the inflection zone trades are more important than algo guy, and that's why I take those regardless of where algo guy is. So I'm going to take a short for algo guy. I wouldn't take a bar for a lick off of this, but I'm taking the short, and I just got filled. I don't know why I didn't hear that. Why did that not fire off? So anyway, I'm short at. Usually I hear my thing fire off. I didn't hear that there. All right, so some areas I'm watching to get out. So this is important in a couple different reasons, right? One, we already said, heads up on this zone. It may fail again, and that's exactly what's happening. This is why you guys want to pay attention to these zones. Right there. And then, what did I say about the lugs? I said, if this can't hold, prior red, directional yellow, heads up, probably heading to the blue. So that's a full 18 points away. Where will I get out of some of these? It's pretty close, but I pay myself as I am correct in important areas. I know there's the R, you want 3R, 2, 3, 4, 5R in your trades, absolutely. But I don't just ignore important areas because I want 3Rs, right? So this is an important area. What do we have here? You got VWAP, you got a baby lug, and another baby lug. Baby lugs they're not as important as the major lugs, but they're still important, especially when they're confluent with something. So this 2375 area, 24-ish, anywhere in here, I'm going to watch very closely if that can't push through there. And we also want tick strike rolling here, and we're going to watch our market pulse in that area to help judge if it's going to blow through or not, if it gets down there. Granted, I'm ready to be tortured here. I don't think it's going straight there because it never feels like it goes straight there. But we will watch this area very closely. And then market profile wise, let's see. This is point of control. So this could bounce right here. This market environment, this market bounces anywhere that's halfway important. These market they bounce. So this would not surprise me to see a little torture treatment before this heads lower, if it heads lower. So we will see. As you can see, I don't know what's going to happen. Nobody knows what's going to happen. I know I have trading rules and I follow them, and I know I have an edge, and I just do the same thing every time, and then you're profitable. Speaking of which, I wanted to show this quickly. Just shows you how when trading isn't great, which it hasn't been for obviously the summer months, and actually a few months before that, it's been a slow grind. So these have been. So this is a good example. This one was profitable, but I pulled back. We'll go over Apex here in a little bit, but. So this was $150,000 account. I went up. I was up almost $6,000, and I had a drawdown. So I blew out of the account, even though it was profitable. That's the one thing that blows for any of these trading things because they're popping up everywhere. Apex is the one I use because it's the best. It's in that document. We'll go over it anyway. A lot of these are profitable, right? This is $3,000, $1,400. You guys remember, this doesn't look like a lot because I've been trading. Like this one's been active for like 40 days. I looked at it last night. But these are really only $5,000 accounts because you can only lose $5,000. So that is like a 60% return on an account. If you make 6% as a fund manager, you're the next coming, right? 60%, that's a good return. Granted, I think these should be higher, and I should already be live on most of these, but it's just been crappy trades. So it's just a grind. What did I tell you? It's that. Then you have one of these, and it's that. Then you have one of these. There's a retest of some zone. I'll be back. So anyway, these are the different strategies that I'm using. You can see, this one's a little underwater, barely profitable. It's a slow grind. So I hope that helps you, not think you're going to come in here and make $1 million in a week, right? It's just, you could put on a trade and hold on. We're at, I'm going to get out of a couple here if this bounces. Let's use, I got 7 on. I'm going to get out of, I'll get out of 3 here. See if we can get down to VWAP. the chart up here. So this is, there's a bunch of stuff here. I'm out of 3 right here. See how they're starting to bounce it? All right, you can hear the sound that worked. So these are areas where it's going to drive me crazy not knowing where this alert's firing off along. So, oh, you know what it is? I think it's the Russell pull all the way back to this zone. You can hear that. There it is. And there's a pullback. So I could actually potentially take a long off here on a retest failure. We'll go over that here. Let me turn that off before I lose my mind. All right, so this, what is this? So we already looked at, it was baby lug, it was VWAP, and then you have a spot gamma level. That's enough for me to get out of. I should have got out of one more. I'll probably get out of one more here. Nah, wait. And this wasn't much of a trade, but you know, I'm not going to ignore. I will watch these areas if I see the big red bubbles plowing through here. If I see the FANG stocks getting smushed, then I'll give it a second. But you can see nothing's going on in here. I have a level. The buyers are coming in. Let's look at our market pulse as well to help judge. This is how you judge whether it's going to blow through. So look, so the hourly market pulse, we'll go over these settings. There is no selling. The 5-minute, there is barely any selling. This is telling me this may bounce here. I don't need to see this bounce all the way back to, I've learned my lesson. So this is what I'm talking about taking our trades. Yeah, I only got like, what did I get off of this? 2 points, which is pathetic, but it is what it is. I don't usually put on, like usually I'll hold that through there. I'll just say, okay, well, I'm going to bite the bullet if it bounces off here.
S&P stocks LES 536.
I should have waited a little longer down to 25, at least made a little more on that. I don't usually put on trades where I'll put it on, but I won't get out in 2 points. I'll just say, okay, well, if it bounces, it bounces. I'm just giving you guys examples. These are more like to teach you guys these areas that I get out at, but I should have given it a couple more points. I was kind of a sissy there. But anyway, this is a perfect scenario now. Why? Because for all you this is the other biggest trading fault out there is the trailing of the stop thing that every algo is built to stop you out of your nonsensical area. Stop the trade. So if you got short with me, you're in. You just caught 5 points, which is almost an ATR. You're like, oh, I'm trailing that thing to break even. If this pops up, which it probably will, you're stopped out in the middle of nowhere. Nothing's going on here. Well, something did, but most of the time, nothing's going on. So now what I can do, I'm going to draw this new event, and then I'm going to trail my stop to something meaningful to the market, not to me, to the market. So this is what I wanted to see. I wish this was.
Stocks LES 760 per contract.
So this is what we wanted. All right. I got out of 3. I still have 4 on. It's fine.
NQI Iceberg sell NQ 152 contract.
All right. So we got stuff firing off finally. Again, I normally just even on in my trade rooms I would not have been out in 2 points. No way. But I just want to show you guys these areas that I get out. And I didn't get out of all of them. I just got out of a piece, and we'll go over the rant.
NQI Iceberg sell NQ 151 contracts.
All right, stuff's starting to pick up. All the little CPI buyers are not feeling too comfortable right now. And so do you guys see the edge that was there? I already knew that zone was important, and boy was it. And we got the volume event. I mean, look at the reaction. You think you might want these zones or learn or know how to draw them? Like, look at this. Now, this actually could become an IZZY the other way. What is this? This is just basically, this is yesterday, which we just gapped through. This was small selling tail directional conviction. This was a 20-plus point move. That's zone worthy. And we ripped right through it this morning. Here we are. So if this volume event that just happened turns bullish, I'll be out of my short and I'll be going long. So let's stop talking and put the zone in the chart. 1950 down. Come on. I thought that was frozen. 1950 down to 1775. Then we'll head over to NASDAQ. My buddy NASDAQ. I'm not going to call him the bad name I usually call him yet. Still have, the day is young though. 45, 1950. It's 45, 1775. ATR is up to 6.81, so it's definitely increasing, expanding. All right, so what do I do first and foremost? Well, I'm short. I trail my stops based on new events. So everything's already in here for you, for me. So I were to short off this zone, my stop's at 27.25. So I'm basically, if this pops back up to 27.25, I'm going to make a whopping 1.5 on the trade, but it is what it is. If this market's truly bearish right here, it should not get an ATR above here, and that's where I'm stopping out. And well, that does seem a little far though. Yeah, because ATR is almost 7. So now I'm going to trail. I still have 4 short on. I'm going to trail it to 27.25. Then what I'm going to do is go long at the same price aggressively. I'll explain what that means. So as you see, my exit price is the same as my entry price. So this is inherently awesome. Like if you're trading Apex, you can't have opposing positions on. Like you can't have trade ES short on one account and then ES long on another account. Well, you'll never have opposing positions on because you'll be out of one before you get in the other. If you're trading this, yeah, you may with the reversion trade, but I'm not going to confuse you guys. So always know if I'm out of my short, then my long, it's the same price as the long. It works out perfectly. So anyway, I will go long the Izzy trade, and I could put on 6 up there. We'll go over this again here, because I know I've been told it's like drinking from a fire hose. Listen to me for the first few times. But all right, so that is working. So what is that? So as long as this doesn't get an ATR below here, and I don't think it did, the long invalidation, it needs to touch 11 for me not to take that long. Did I touch 11? No. Right? So what did I do here? You guys saw my Izzy trade. So Izzy's are aggressive trades, meaning you don't wait for the retest. And this is exactly why you don't wait for the retest. That inflection zone I showed you on the bar chart is so important. Many times, many times, the market does not come back, retest, and go. It just goes. So I don't wait for retest. The minute it breaks outside of an ATR, which was 28.50, I'm in the trade. So now, I was in that short. My stop was way above here, whatever the ATR was at the time, whatever that price was. Now I get to move my stop all the way down based on this amount, and that would be that 27.25. So not only will I get out of my short, then this is an Izzy zone that I would take the long with a bounce out of here, and that's this right here, right now. Right. So then I want to see what are my next areas to get out of this trade. I'm definitely going to watch blue lug. So you see, this is another area I'm going to get out of. I'm actually going to get out of another one here. So I'm going to get out of 2 here. This is market profile, composite value area low. Hold on, let me get out of 2. Come on. All right, so I'm out of 2. So I'm going to get out of the rest too at this blue lug if it can't push through. But these are the areas that I have already predetermined that I get out of my trade. This one, where I got out of a couple, again, I know that was very close to my entry. I should have waited to VWAP, but I'm kind of a sissy up here. Like I said, baby lug, VWAP. I get out of some.
LGC 152 contracts.
Market profile composite lows. I'll get out of some. Am I just coming up with this as I trade? No. These are all. And it's a prerequisite. If you come to my room, you have to tattoo to this entire document to your forehead, or your thigh. If you don't want to be that obvious about it, you can do it to your thigh. I pay myself as the market makes money available to me. Ludwig levels. There was a baby lug. VWAP. These two things were confluent. I got out of some. I don't just get out of VWAP by itself, but if it's confluent something, which it was, I got out. And then where I just get out of 2 more, market profile composite low. And then the rest now, I've got a whopping 2 on. I will let ride to the blue lug. If it hesitates at all at this blue lug, and you can see what the blue lug is near. I'm sure there's some relationship. I don't know her secret sauce. Blue lug, right near that puppy. I will be out of the whole thing if that even remotely starts to bounce. Right? And then on to my next trade. So let's see what happens here. Let's go over to Mr. NASDAQ. I'm going to keep being nice to him until he screws me over. May have already missed the trade here. You know, normally I want to be over at NASDAQ right away because it's such a fast mover, but I know how many love to stare at the shitty ES all day long, pardon my language. So that's why I cover that more at length. You guys are, I harp on it every single day. You're doing yourself a grave disservice if you're not using these methods in every futures market. As long as you know your thresholds, it's the same patterns in any market that you've shown me. I will show you the same exact patterns. So these are not threshold, but you had sell ice here. Take your bubbles off, figure out you want to pull up your last price line, right click the chart, go to configure visible components right here. Make sure last price is checked. That'll give you the line. It's going to help you draw your zone. Now what do we want to do? I want to incorporate every single price that happened in this spike. I went all the way up to here, and I went all the way down to there. That's my zone. Change the color here. So I use black for sell ice, blue for buy ice, yellow for stops. Yellow and white for stops. I would use red, but I can't. I'm colorblind and it's hard to see, so that's why I don't use red. Or orange, whatever color this is. It's hard to see with the liquidity stuff. That's why I use white and yellow, in case you're wondering. All right, so that's the NASDAQ zone right there. Doesn't look like we missed much, hopefully. Looks like 24.50. It should be on the exact price, but that actually looks like it's. You want to spread your chart out so you get the right prices. You can see now you popped up. This is actually wrong. $24.75. No. I know this takes a while, but it is what it is with these drawing tools at the moment. I actually am working with a guy in my room, the same guy that we're doing the ATR stuff. He's convinced we have a automated zone drawing tool coming out that would save me years off my life and you guys, so that would be awesome. All right, so I already forgot the zone top. Sorry, I know this is annoying to watch. All right, the bottom's 15.325. Let's plug that in. I already forgot what I said the top was. Or was that the top? Sorry, that was the top. 15.307. 15.308 quarter is the bottom. I'm pretty sure we'll get it where it'll populate the zones in the spreadsheet automatically. There's a lot of good things in the hopper coming your way, so be ready. All right, so to make this a long setup, it needs to touch the validation price of 55 quarter. To make it a short setup, it needs to touch the validation price of 278. Now we wait and see what happens. What's Algo Guy look like? Just so I know if I can trade the barfs and the licks, those strategies. Algo Guy is bearish right now. Can't take any longs off of that. Potentially can take an Izzy. Let's see if this is an Izzy zone. Certainly was. We're right at the bottom of there. I can take a long out of here aggressively. What's that price? Back to the handy dandy spreadsheet. 59.75. I could put on 3. Izzy. I will set that up and go long. 59.75. That's number 70. All right, so that's working. So you guys can see why I get out like. This is per example. Yeah, I want 50R on this trade. Do I just ignore volume events and areas on the chart because I want the thing to go 3R? And that makes no sense. Yes, when I put on trades, I think they have a potential to go 2, 3, 4R, right? And I'll leave a piece on, like I still have 2 on here. I gave that a chance to at least get down to blue lug, and that would have been 2R, right? But almost 3R. But I don't just ignore areas on the chart. I got out of a couple here. And then I got out, look where it bounced. This is why I get out at these areas. A portion, I still have some on. I will give it a chance to do that. If it comes up and stops me out, then I'm out of the trade, on to the next trade. Let's see if I can take barf longs here as well. So this is still bullish. It's never pulled below. So I can take, not only will I'll get out of my short, which I'm about to get stopped out of, the rest of them. I made a little profit on the first part. I'll be out at 27.25. I will flip long on the Izzy trade. Izzy, we already showed this. Izzy strategy that it just bounced right out of the zone. You think these zones are kind of powerful? And then I can take a barf. Blind ATR retest failure. And I said for the month of July, but I'm gonna stay with it because it's been very good. Been very good to me. Baseball's been very, very good to me. Anyway, if it comes back here, I think I touched the valid, and we'll watch if the ATR reversion trade works here too. Let's see here. So to make that a long setup, this needed to touch 26.25. It did that. And if you did the ATR short, you'd be short at 25.75. You're risking the 35.75, and you're just playing back to the zone. Let's see what happens here. I would not, so this is actually a disqualifier for the reversion trade, and I'm talking to my room mostly because they're the ones doing this. This, I would not be touching reversion trades right now. Why? Because, look at this relative volume. Big money is playing here. I'm not messing around when big money is involved. Big money runs algos over. We're playing, the reversion trade is playing with the algos. Algos get smushed when you see that kind of relative volume. So I personally would not take reversion trades hoping it comes back to that zone. Somebody big is playing in here. This thing could just rip now. So that's one of the, you can learn these things. I'm going to have a course for that as well. All this stuff's coming out very, very shortly. But you can learn the reversion trade, the disqualifiers. You can learn it in my room as well. But if you can't make it to my course, I'm not saying this won't retest, but it has a much lower percentage of retesting than if the volume is nothing. Then you get these algos that just snap it right back. It's trying, but I'm still doubtful that it's going to make it back to the zone. But if it does, what can I put on? I could put on the barf long. Hey, whoa, didn't mean to do that. ATR retest failure. Go long there. Same price I'm going long the Izzy trade, and see if there's any liquidity up here. Long-term liquidity. Yeah, there's a little bit. I'll put that on. I'll put the lick trade on too. I wouldn't count this as liquidity. I never count liquidity that's just popping in and out of the order book, right? Yeah, this has been sitting here for a little bit, but I don't consider that the long term. I like to see big bands that have been there forever, and those are magnets, and that's why we take that trade. All right, let's see if you guys got any questions.
The US to sell $69 billion in 3-month bills on August 14th, that's on August 17th. And the US to sell $62 billion in 6-month bills on August 14th, that's on August 17th.
Alejandro says, Scott, with all due respect, you should step aside, and rethink your strategy. All right, Alejandro, I'll entertain your thought. What am I rethinking my strategy? What strategy am I rethinking? Please let the inquiring minds want to know. And by the way, here's your retest of the zone. That's that one strategy that I talk about. Granted, like I said, I would have been very hesitant in this one. Alejandro, please expand on your expertise in the markets. Hey, listen, if somebody knows more than me, or somebody always knows more than you. You should know that, right? I am not a trader that thinks I know it all. I always am learning. There's always new stuff coming out, like market pulse. I still haven't had a chance to show you the morning market pulses. I am always willing to learn and add new things if I think they're relevant, right? If you think you know it all, you're done. You're not going to make it. You'll learn real quick. You don't know it all. But for you to say I should step aside and rethink my strategy, please expand on that. Oh, by the way, do you see why I put my stop outside of the zone? ATR. Did you see how it didn't make an ATR? It got just inside and then came back. Do you see how I wasn't stopped out on random rotations when nothing is going on? That's why I do that, guys. How many people jumped in that short with me and just got stopped out and are kicking themselves right now that they got out on this pullback because they didn't want to give back all the profit that they had, 10 points of profit in the trade. They didn't want to give it all back. They got out right there. And right now they're like, oh my God, are you kidding me? This is why I put my stops where I do. Alejandro, I'm still waiting for your response. You can't put a comment like that in there and not explain to me what I'm rethinking, what strategy I'm rethinking. You know, the strategies that I've been doing for 5 years that are profitable. Please explain. I would love to hear that. All right, I'm watching this blue lug here very closely. If this can't pop through, I'm out. And I never got filled on that NASDAQ trade either. I don't believe. Let me see. I never put that in actually. Did I not? Hold on. I don't think I put that in. I want to see. Anyway, here we are. It's real close to this blue lug. I will be getting out of the 2 if it bounces here. So I guess Alejandro just likes to talk smack and then doesn't expand. So that's fine. I would assume most people get a lot out of these webinars, and that's why I do them. But you can't put a comment in there like that and not think I'm going to respond to it. Why did this not? Oh, because it's 700. So this was close to threshold right here. So I'm going to be real. I don't need to see exact blue lug to, especially with 600 ice coming here. If I see any blue bubbles here, I'm out. Give it one more chance. Keep an eye on that. So you do have some sellers coming in on the market pulse. We'll go over this here in a second, but this is real close to blue lug. I'm out. And I just bought too many, of course. My mistakes with this rhythmic. Hold on. There I scratched. All right, I'm out. So that's close enough. It got down to 1250. Blue lug was 1150. Do I need to try to squeeze out an extra point? No thanks. Especially when I saw bias coming in down there. And especially I know it's the bottom of this, real close to the top of this. Does it mean it can't blow right through blue lug? No, but there's another setup right around the corner. I can get short again. And here's your bounce. All right, so let's see if I might have made a mistake and not put on the NASDAQ trade. What was that price? I was going to. Remember, I was going to take that Izzy trade. I may have gotten lucky there. Let's see. So I was supposed to go long at 59.75 on that Izzy. That's the aggressive entry. I don't think I got there. What did it do, though? Yeah, never got there. So I would have never been long. And the reversion trade worked. Granted, like I said, I would have been very skeptical on those reversions with that kind of relative volume coming in, but they both worked. Here's your reversion trade. Maybe I should rethink this strategy too, Alejandro. Short at 52 quarter, out at 28. Right there. Over and over and over and over. Short, you took about 3 points of heat, and then a nice 30-point winner. Pretty close. There you go. And I don't trade stocks. So the way stocks that I watch are right here, the FANG stocks, and I watch them on this. I don't look at them otherwise. I don't even have NVIDIA on here, actually. All right, so, I got out on the bounce. It's moving lower. Market pulse was showing me the sellers were still in charge here. You can see this is only the 5-minute, the hourly. We're going to go over what these mean here when it slows down a little bit. This was not getting the threshold. This was this is showing me the most buying or selling within the last hour. But this, I don't need to screw around here. Like, if this keeps going, great. One, I want to see the markets go to zero anyway, but there's going to be another setup. Trust me, you're going to get puking, especially if it gets inside this market profile composite. There's going to be another setup, right? This was almost a setup. For me, I don't usually go under my threshold. I'll move my thresholds higher for the day if I keep seeing threshold hit, but I don't go lower. So this was 633. It was my threshold, 700. You could make exceptions, but because you're trading against algos. Algos don't make exceptions. They don't have 700 inputted in their system, and then they see 633 like, that's close enough. Algos don't say that's close enough. So if you want to beat an algo, you got to trade like an algo. Don't make exceptions. So I'm not trading that zone or this volume event. I'm going to wait for a new volume event. All right. So the long though is disqualified. Right. Remember, I was going to go long the Izzy trade off of here. Inflection zone trade, the bounce, when it almost got filled up here, well, that's disqualified. Why? Because it got an ATR below here. Can I take the short off of this? No, for me, because it already got the ATR above this zone. So that disqualified my short. That's how I disqualify the short. So this zone is dead to me now. I'm not trading off of it. NASDAQ may still be alive to go long. Let's see. Definitely can't go short because I got the ATR. NASDAQ, let's see. This may be dead too. Long a validation price, 278.
Daily says I see slowing in the economy, but we're not there yet.
Oh, we got Fed chirps right now. No wonder high relative volume's hitting. This got almost exactly the ATR and popped right back. I don't take the ATR trades both ways. Actually, Lance, the guy that's just killing it, he does take them both ways. This one worked both ways, right? Look at that.
It's still hard to find work.
Especially don't take them with Fed guys chirping. I can tell you that. But this worked. Just to show you the patterns. There you go. ATR, back to the zone. ATR, back to the zone. Learn it, live it.
Daily says whether we raise rates or hold, it's premature to say.
So it's really weird how, let's see, very strange how Daly wasn't scheduled to speak and the markets are getting smushed and then he comes out and starts talking. Really, really odd. Guys, it's the same game every single time. You got good cop, bad cop. Every time the market starts to get killed, they come out unannounced and start talking. The market does that, right? Then it rallies for the next day or two up into, whenever head clown, whatever his name is, can't think of his name, Powell, starts talking. Then, so he's bad cop. Good cop are these guys that come in and save the market. Then he comes out and lays the hammer down what's actually happening in the market. And then the market sells off, but it just goes back to where it was when the good cops came in. It's a joke. It's literally it's the most manipulated thing you can possibly see. You can complain about it or you can join them, right? You can see what's going on with the big money because they know what's happening too. You can beat them. If you can't beat them, join them, right? Trust me, for years, I was, especially when, I started struggling making money, couldn't make money anymore, algos were taking over, and I would just sit there and bitch. This stuff's so fixed, it's so rigged. It is. It 100% is. But now we can see what they're doing. That's the key. You can see what they are doing, right? You can't hide volume. They try to hide volume, but now we can see it. Icebergs. Icebergs are hidden volume. We can see it. So get off of that. You can't beat the markets because they're fixed. You can beat them because you can see what they're doing. But I just love this. So I have this. I mean, he may have been announced, but usually this thing's spot on. You can see this in my trade room as well. My incredible trade room. This is another thing that you can see on there, the edge. You can see this thing was overbought before it got killed, way up here. Anyway, do you see Fed Daily on here as a speaker? Yeah, I see Bostic at 12 Eastern. I see two Fed guys later. I don't see any Daily here. I wonder why that is. I wonder why he's talking right now. Like, uh-oh, red flag. We're selling off. Someone get on. We were making a joke last week. Someone might have a phone in their bathroom. They see the market selling off, like, oh crap, we got to come and say something, so it pops back up. It's hysterical. It sounds like nonsensical, but watch markets long enough, you will be a believer.
Daily says the key is goods price inflation, which is coming down, and service price inflation, which we predict is coming down.
Alejandro, still the cat's got your tongue, I guess. Huh? I want to hear what an expert you are, like how much money you've made in the markets and why what I'm doing is not correct. I'd love to hear it. But it's like you got guys that come on and say stuff like that. It's just, and then it's just crickets. It's hysterical. All right, I'm over it. I'm tired. I'm not gonna keep saying it. That bothers me though. People that have no idea what they're talking about talk.
We'll be watching is core services inflation excluding
All right, so what did I miss here? So you want to bring this up too, because just like me, you're doing other things. You hear it, but you don't hear it. So bring up your text alerts as well. Go to file.
Says we need to see super core inflation come back to pre-pandemic levels before I feel comfortable we've done enough.
Alerts, and then you get this text box, and then it tells you exactly what fired off. So did I miss? I might have missed something here additional. Let's see. You think a guy that would come on? This is my last thing I'm gonna say about it. You think I would have put on a loser, and then he comes out and says, "Yeah, you suck." We put on a 17-point ES winner, and the guy's telling me that I don't know what I'm doing. I know it's a one trade, but the point is, it's like, at least wait till I do something wrong. It's like, people never cease to amaze me. You should see the stuff that I see and hear. Anyway, I don't see any other volume event, so that must have been this one here. But I can't trade this one because it already got the ATR above, and it got an ATR below. It's disqualified for me. DQ'd, as we say in my room. So I will wait for the next event in there, and I'm waiting for the next event in ES. Actually, I got to cancel my longs. I know it's not like me to leave orders in the order book. Being sarcastic. And I think I missed a trade here earlier. I was going to draw this on, and that's exactly what I did. Let's see here. This was soybeans. Let me show you before this, because this is blown away and come back. Actually, this might be ATR retest. This might be the 3 ATR. So I tell my room, just from the limited experience of using these ATR trades, we've really been doing it since last September. The best ATR reversion trades, like I was saying earlier, like you guys are probably saying, well, which one do I use? The 1, the 2, or the 3? 3s are the best in grains and natural gas and bonds. That was that. That was sell ice. Let me just make sure I don't have any working orders, because that's my MO. Hold on, give me 1 second here. Yep, I sure did. Wait, what was this trade? Show me the loss. I must have left something in there because I didn't put any trade. Hold on. Sorry guys, you can't see what I'm doing here for a second. I just got to see what I took a loss in. Oh, I shorted wheat, so wheat was a loser. We didn't even go over that on the webinar. I was wondering, I'm like, I don't remember putting another trade on. That was pre-market, or pre-webinar. So let's see what happened here.
Ed Daly says we are a long way out from a conversation about rate cuts.
Yeah, I was long here. So this was a broken ice setup. Oh, you know what I think I did? Wait, no, hold on. I can't remember what I did, like literally even an hour ago. Yeah, I took an Izzy trade here. See that zone? There was a volume event in this zone. Right here. Daily's still chirping, by the way. There was a volume event right at the open in grains, and I took it the minute it broke out of there. Granted, this inflection zone isn't the best because it's just been kind of hanging around inside here. I probably should have waited for ATR retest. That's one of my rules. And then I would have avoided this loss. But I got in right away and it broke. But you can see what I was fighting too. So that zone wasn't the best. Like, it wasn't the strongest. I'm definitely going to delete it now. And I was fighting Algo Guy as well. So I don't take Algo Guy in consideration for Izzy zones. But that Izzy zone, I should have at least waited for retest failure. And you can see here on my strategies, the Izzy zone. In case of the zone that is directly above or below multi-leg balance areas, the trade is still taken but needs ATR retest failure. This also applies to a situation that the market is accepting in the zone, and that was that situation, and I didn't see that and took the loss. So at least you guys didn't have to endure that loss. All right, so you can see I didn't take a short off of this zone, like I said, but this is not a coincidence. This bounced right off that volume event. That's why we use them, because they're the most important things in trading. Deborah, don't worry about idiots. Thank you. It still bothers me. It's just like, I come on here and give you guys my knowledge, 20 plus years, so you don't have to go through the heartache, and then I get comments like that. And then he doesn't follow up. That's fine. If you think what I'm doing is wrong, which is incorrect because the proof's in the pudding, right? Tell me why. And tell me how you make your millions of dollars. Tell me how you made $15 million in 3 years. I'd love to hear it. All right. Now I'm officially done. Not going to say another word unless he chimes in, and then I'll go off on him. All right. We missed some stuff in gold, potentially. I'm going to show you quickly the Market Pulse. This is the new. They got it for the web. You don't need the MBO data for Market Pulse. I'm seeing a lot of incredible stuff for it. I just want to see here. I missed this trade. Here you go. Is this broken ice? Or this Titanic setup. This is one of my 6 distinct setups. Not trading strategies, just setups that I base my trading strategies off of. That's in my course. You can get the course on the Bookmap marketplace, or I put the link in for my course. I got a new one coming out here very shortly. Here's 100% that was ATR, retest failure. How's that trade? I don't know if you like 100 tick trades. That's for you. Missed that one completely. That's my own fault. I didn't even draw the zone after the number because I was doing the charts for my room and stuff. So that sucks. All right, let me show you the Izzy stuff, or the Izzy stuff, the market pull stuff from pre-market. Hi, Sigil. What's going on? Eric, thank you for sharing your knowledge. Those of us are here to learn. Appreciate you sharing these gems with us. You're welcome. That makes me feel better. Thank you. All right, so these are the patterns here. Look at all this buying right at the open here, right? So I'm going to just get rid of the zone too because it's not worthy anymore. And I want to confuse myself thinking it's something. So look at these. So I have this set on, I'm going to have a course for this, but I have this set on an hour. It's reading back an hour for the most buying or selling. So I want to see significance. So you can see the difference between the hour and 5 minutes. I got 5 minutes here too that I'll use sometimes just to help me judge areas. But if I put on the 5 minutes, you can see there's a lot more spikes, obviously, right? Tons of spikes. Well, that's just showing the most buying or selling in the last 5 minutes. They're going to be all over the place. I want to see mine more filtered. So you can see here, and this is the pattern. It's just like the ATR retest. I don't have a set amount of points or whatever it has to go, but as long as it gets outside of that area, there's the first one, comes back. When it makes the new high, you go long and you put your stop just below the area. You catch that whopper. I mean, this, you would have been in this entire trade off of this one, and then they just keep coming in. You can actually trail stops to these. These were almost, and then you had threshold here, same exact pattern, moves away, boom, you get long after the next high, and then more buying came in, same exact pattern. There you go, you get long there, and you catch this whole move up. Right, started down here. And that gives you a thesis too. You're like, okay, buyers are in control and they're not losing. Now, if you see all this and it gets below there, then they're in trouble. And this is actually longer term. We're right where this started this morning. So all these buyers are not feeling real good right now. I can tell you that, especially the ones that bought up here. You don't know what they did. You're never going to know. You don't know, did they get out? Did they add? You don't know. You just got to look at the areas and make your best judgment. I do know that they're not feeling very hot right here, right? And this thing could take a nosedive, which would make me smile. All right, but bigger picture, this is still bullish. Why? All this is a pullback to this multi-day balance area. See that? That's not a very good drawing. So when markets break out of balance areas, many, many, many times, almost all times for equities, it seems like, they'll pull back, they'll shake out all the weak longs, pull back to the top of the balance area, and then they'll launch. They'll pull back to the high volume node of the balance area, and then they'll launch. If it gets through the high volume node, then you want to watch out. Then that would be an official fail breakout, and then you expect all the way down here. That's what I'm going to be expecting. I'm still giving it the benefit of the doubt. Actually, I should have a zone right here because this is where this gapped up. I just didn't. I was watching this and I didn't. I thought I may come back down there. So this is actually a zone in its own right, and this is right going to be right where the pretty much the bottom of the high volume node of this balance. So if this breaks this zone, I would be very, very careful of getting long for longer term trades because this thing is in major trouble. Just common sense. I preach to my room every day. Use common sense. This has been going on for the entire, going back to basically Friday or Monday, right? Just imagine you're long in here and this does this and you're like, yeah, I got it. I knew this was going to move up to 4,600, the spot gamma levels up there. And then you're like this, and then you're like, okay, wait a second. Oh, crap. I got to get out. That's what that is. If you look at trading that way, things will clear up for you dramatically. Common sense. Just pretend you're the big trader there and you got long. Pretend you're the big trader there and you got long today in any of these areas. How are you feeling? You're not feeling very hot. I can tell you that. You're about to... We've only seen one puke. You're going to be seeing... This moves a little lower. You're going to be seeing a lot more stop runs. I can promise you that. And what are stop runs? They're pukes. All right. Any questions, guys? We need your spreadsheet, Mr. Scott. Walker says, yeah, it'll be available. It's ready to go, pretty much. Hired a dude from India. He built it for me, and he's going to put it in. It actually should be live today, I think. Then I'll send out an email. You guys can have at it. I'll have 2 different options: monthly subscription, or you can buy the yearly. I think the monthly is going to be $59 for a month, or if you buy the yearly, it takes 20% off. So you guys will get an email. Just put your name on my website on that email section, whatever it is. All right, so there's really not much going on here. $15 in 3 years. I'm here for it. So yes, guys, it was a long time ago, right? But my story, it should even be more. People don't want to see traders standing in front of their damn Lamborghinis. Who gives a crap? How does that help you, right? What you should get out of this is, so first of all, get this book. This will help your trading immensely, but I'm in this book, right? This guy Brett Steenberger, he's the best trading psychologist on the planet, in my opinion. He sat behind me for a full year to figure out. This is more about, this even talks about Michael Jordan. It talks about what makes people great, right? I was one of the top scalpers on the planet at one time, 2002 to 2005, right? I was 10% of the world E-mini volume every single day. That's how active I was, right? As Alejandro said, I don't know what I'm talking about. Anyway, so he sat behind me for a year and he wanted to see what made me click. So he saw how I traded. He's the one who introduced me to Bookmap, right? So point is, read his book. I forgot where I was going with this. So the story is what's better. It's not, hey man, I made $15 million in 3 years. It's, I made $15 million in 3 years and conditions changed and I went from millionaire to zero, right? Because when you have a lifestyle, when you make $15 million in 3 years and you're a trader, traders always think they're going to make it back. So I just kept firing away, even though my scalping didn't work anymore because the algos took over, right? And I went nosedive, right? And I'm still married to my wife, and it was a joke at first. It wasn't a joke after about 3, 4, 5, 6, 7, 8, 9 years. I told her she married Superman and got Clark Kent, right? Because when she married me, it was right when I started making this kind of money. Could you imagine what a wife feels when she's going on trips, buying racehorses, buying condos, and then you go to zero, right? So why am I telling you guys this, right? First of all, it's well documented, and I have no problem telling it. I'm not one of those traders that just lie and say, oh yeah, man, I'm $1 million trader. Have been for 20 years. I went to nothing. I had to get out of the business. I had to go kiss doctors' asses all day long selling genetic testing to them, right? Do you know the feeling of when you make this kind of money and then you go in a doctor's office and they treat you like some peon and they have no idea that you probably made more money in 3 years than they're going to see in their lifetime? Do you know that feeling? It doesn't feel very good, trust me. So the point is, that should resonate with all of you. I went from that, zero, to that. Trading one lots I started with, like any other trader, and built that up. So you know it could be done. Then I went to that. Then Bookmap was introduced to me by this man. He called me and said, you got to check out this book. And it reminds me, because remember he sat behind me for a year, it reminds me of how you used to trade, how you viewed the markets. I looked at it. The minute I saw it, I knew I was back, right? And then they came out with the SI indicator. Then I knew I was back, and I was going to be a $1 million trader again. Not there yet, because I don't have a firm behind me. I'm building it up slowly. But this should resonate with you that I am able to come back from the depths of hell, and I have a system now that works based on what I see in Bookmap. So if there's not something that's more motivational for you, I don't know what is, right? It's not that I'm sitting here where you guys don't think this is attainable, where being $1 million trader is attainable. I did it the first time from nothing, and I'm going to do it again with what I'm showing you, the exact methods I'm showing you on these webinars. So that should be, you guys should be like just excited beyond belief, unless you're Alejandro and say, I don't know what I'm talking about, right? So you guys get the point. Went from millionaire to zero, and I'm on my way back, right? So please join me. What I'm teaching you here is how to compete with the guys, the algos, the guys that build the algos that take your money. How do you think the firms are alive and alive and well in trading? They take your money. Are you sick of them taking your money? Well, then start to pay attention to what I'm teaching you, and you will be able to fight back. That's my goal of being an educator, right? All right, there's that rant. See what Alejandro did? He got me on a rant. I guess I'm that fragile mentally. You can make fun of most things about me, but don't make fun of what I'm doing here, because this is what drives markets, guys. I'm telling you. And if you don't think it is, you just don't understand. That's all I can tell you. I'm not saying my exact trading strategies and methods are perfect or they can't be expanded on. I hope you can expand on it and then show me what you found that's better. But I'm telling you the core of this stuff, which is this stuff. And now Market Pulse, and they just keep coming out with more and more great things. If you don't have this in your trading, you don't have all the information. I say it every single webinar. All right, pretty dead. Coming up to the time I got to hop off. If you got questions, fire them in. You're the mascot. Thanks for your help and advice. Thank you, detail guy. I hate people who only post on the wins. I respect the ones who talk about the losses, but ouch, that must hurt. There's, everything's relative. I look back at a lot of really dumb mistakes I made when I was making the money, because you get that all the time too. Like people you meet and friends, and like, well, what the hell, man? You made $15 million. Where's it all at? Well, when you cut it in half, back then I had to split it with my trading firm.
RTY Iceberg sell RT 170 contracts.
Cut it in half, and then you pay taxes on it. Now you're looking at $3-4 million. That's a lot of money. Don't get me wrong, but when you're spending it, like you're going to make it tomorrow. When I was in 2003, I made $10 million. To make $10 million, you got to average $50,000 every single trading day. I didn't make $50,000 every trading day. I averaged $50,000. That's what I was explaining earlier. You're not going to make it every day. So if I would go and do something stupid, like I love racehorses, betting them, buying them. I was, bet on sports. If I would lose 50 grand betting on sports on the weekend, I'd make it back by Monday morning at 10 o'clock a lot of days, right? So it was all relative back then. So I wasn't like, I just always thought I would keep making it. It's just a great lesson for you guys, right? It's like I thought I had a special gift, and I did. I still do. I still pick up patterns better than most people in these markets. That's what all this stuff's based off of. But I thought I had made it, and it was just going to continue, and it went away, and I had a rude awakening. And I learned, trust me, when I make the millions this time, I'm not going to be throwing away 50 grand on betting on games or buying racehorses, or I've learned my lesson. Another example, how you can learn those lessons from me without having to go through it. So listen to me when I talk, unless you're Alejandro. I shake things off very, very easily, as you can tell. All right, guys, if you don't have any questions, not a ton. I mean, the markets were moving. We caught this move down to 45 right around here, and this is where this is bouncing. So what I can tell you is, get my course if you want to learn the setups. If you buy it right now, I come out with a new one. I won't charge you for the new one. I'll give you the new one for free. So just send me an email, say I'm buying it, because if you want to fast track before I get this thing out, I'll give you the new one for free. That's not going to be, that's just for literally like today until I release the course. I'm not giving whoever bought the course, I'm going to have a deal for those of you who have bought my course. There's going to be a good deal for the new one, but it's not going to be free, right? But I'm telling you, from today until I release the course, because it's only going to be hopefully in the next few days, if you buy the new one if you want, or the old one to fast track it, I'll give you the new one for free. Other than that, wait for the new one, that'll be out, but it's going to be more expensive, I can tell you that. Other than that, get the course, get the Ludwig levels, like these. I use these things for a reason, because they're ridiculous. Let's see if this formed new ones. No. Yes, it did actually. So you got new lugs. And what kind of volume did you see to force new lugs that punctured through that blue lug at the time? Heavy relative volume. That's when they usually break. Otherwise, the majority of the time they hold. There you go. There's your heavy relative volume. Other than that, I'm going to have a subscription for these zones. You've already seen in these webinars how incredible these zones are in their own right. But I don't trade the zones with other volume events. I know how powerful these are. I just don't jump in shorts until I see something. But we got something, and you got the move, right? This will be out hopefully in the next couple of days. You can get access to that. It's going to be very cheap, like $24 a month or something. And then the biggest thing, the whopper, is this thing. This thing's worth about $1 million, right? And it's going to be, you can get it. You get it as part of my trade room, and the zones. But if you can't join my trade room, like I said at the beginning of the webinar, you'll get this. It's going to be like $59 a month. Or you can do the yearly. It's 20% off of that. All right, guys, I'm out. Questions, you can email me. Other than that, I got my trading room. There's links to all that stuff. I posted at the beginning of the webinar. Just look in the chat box. I will see you guys next Thursday. Thank you. Have a great day, Alejandro. Great for you to chime back in when I ask.